All right. Okay, we'll get started. Welcome, everyone. Thank you so much for joining us for today's deep dive. Today, we will be going over the Omaha Municipal Land Bank's tax lien process, and we have an amazing speaker with us, their in-house counsel, and Dina Woloka, right? Do I say that correct?
Yes. Yep.
All right, yes. I realize I don't say your last name much. But I wanted to send some preliminary things your way first, before we hand it over to her. First, thank you so much for joining us for our deep dives. We are with Spark, the Developer Academy. I am Angel Starks. I get to serve as the Developer Academy Manager. And one of our continuing technical assistance opportunities is to provide monthly deep dives. And this is one of them. And we're very grateful for our industry leaders that assist with our efforts to continue to put technical assistance and real life practical information in the hands of our community members. So thank you for being here. And I also want to give special thanks to our partners. We have Spark, of course, which is our umbrelling organization, where we also have our Spark, which focuses on profoundly encouraging individuals in disinvested areas. And we just went over our mission statement, and I still forgot what it was. But we are the people that are encouraging individuals to take ownership and pride in their communities at various levels, in order for them to continue to build up prosperity in those areas. Again, Spark Developer Academy, we have done this for about 2 years now, and these deep dives are welcome to anyone. Of course, there's a charge for them for general admission, but you get a wealth of knowledge, and that's our ability to sustain programming for future. Special thanks to Dina for being here. And then we will have another deep dive on November 22nd that covers building resilient homes. All of our deep dives will be still featured on our website, sparkcdi.org, and we will continue to update the calendar for 2023. Special thanks to our partners, the National Development Council, and also Freddie Mac. We also have several Developer Academy sponsors: Wells Fargo, US Bank, Kiewit, and the Bank of the West. Now that my preliminary things have been done, I will share Dina's presentation. And to answer your question, I believe I saw a question in the chat about whether or not this will be available after. And yes, it will be sent out to you via a link with any other items that we discussed that might be handouts and or links that are beneficial to you. I will send that out within the next few days, including this link. All right. Okay, with that, if I don't have any other initial questions, can everyone see my screen?
Yep.
Perfect. All right, Dina, do you want to tell us who you are and all those great things? And then
Sure.
We can get started with your presentation.
Thank you. My name is Dina Woloka. I am in-house counsel here with the Omaha Municipal Land Bank. I have been here for almost 2 years. And prior to coming here, I spent 20 years working for a investor private company that bought tax liens. So I spent about 20 years foreclosing on tax liens. The bulk of my career. I think I only worked 2 years outside of it. So like, other than these 2 years. So this is what I've mostly been doing. So I unwittingly became an expert in tax liens. I don't know how that happened, and it's not very exciting, but it is what it is. So, so today I just wanted to share with y'all how they work in Nebraska. And I thought the way to start that would probably be to talk about how property taxes work in Nebraska. So I think that's my first screen there. Oh, this is about our land bank. And we do use tax certificates at the land bank. That is one of the ways that we get acquire properties. In fact, currently the bulk of our properties are acquired through tax foreclosure. Although we do take donations, so if anybody wants to unload some property, call me up. Maybe we can take it. But tax liens our tax foreclosure is the bulk of how we get our property.
Question about that, Dina. And also I want to encourage other individuals, if you have a question, you can utilize the chat feature and I will speak up on your behalf, or you can raise your hand, or you can just chime in if you'd like to, respectfully, of course. So with the land bank and their use of the tax lien foreclosure process, there are other individuals that actually utilize this. Do you all have priority, or is it just also due course of if you follow after this same process that the land bank gets the land?
The Omaha Land Bank, and this is the only land bank in the state that has this power, we have by statute what's called an automatic bid. And what that allows us to do is if we, there are 7 criteria on that. It's by statute. And if our board determines that there are properties that meet these criteria, I think it's 2 out of the 7 or 1, I can't remember what it is. And they, by resolution, they say that we want these properties for these specific reasons. We can, prior to the tax sale, we can send that list to the Douglas County Treasurer, and they remove those from the public sale, and they're automatically, the certificates are automatically sold to the land bank. We do have to pay for them, just like anybody else does, but we basically get to cut in line for those specific, and they're very specific. I mean, it's not gonna apply to something, you know, that's out, I'd say Regency, but that ages me because I know there's way further west or bigger neighborhoods. But you know, it's gonna be where the bulk of our properties are in North and South Omaha.
Thank you. Thank you.
Okay, so how do property taxes work in Nebraska? So every piece of property in Nebraska is taxed. I'm sure everybody's hearing it's election season, so property taxes are always a big sell during election season. But that's you know how our property is taxed. And when they're taxed, the taxes are assessed on December 31st every year. And on that date, they become a first lien on the property. And that means that they are above your mortgage. They're above any judgments you may have. They're above an IRS lien. They're above a state tax lien. They're a super lien, basically. And they remain a lien on the property until they're either paid or extinguished by law. And this also means that like the taxes for 2022 are going to take priority to the taxes for the year 2021. So it's first in line, or last in time, first in line is how that works. And then they are payable. They become due on December 31st, but they're not delinquent until in Douglas County, it is April 1st and August 1st. In other parts of the state and smaller parts, it's September 1st and May 1st that you pay them in installments. Maybe the next slide.
And then also our properties taxes are in arrears.
Yeah, yep, that's true. So this year in 2022, you're paying your 2021 taxes. And that becomes important because if they're not paid in this year, then they will go to sale next March, in March of 2023. So by the time that the taxes even go to sale, they've already been delinquent a year.
Oh, that's understandable. That makes a lot more sense on why they're so delinquent. Because they're already past a year's time.
Yeah.
I gotcha. Okay.
So, I'm referring to my notes here. So, like I said, if you don't pay them, then the first Monday in March every year, every county in Nebraska holds a tax sale. And these sales are open to the public. You have to register. I'm just going to talk about Douglas County because that's where we're at. You register with the Douglas County Treasurer. They actually do it online now. In the olden days, we used to sit in a big old room for hours on end and do this. But now it's online. I believe the registration fee is $25. So if you have $25 in access to online, you can purchase certificates at the Douglas County tax sale. They released the list of available liens, I believe in February, like the middle of February, and that is also online, and it's also in the daily record. And there's just, hundreds and hundreds and hundreds of properties on that list. And all they're going to tell you is the key number of the property, the legal description of the property, and what's owed. So it's up to the individual or company that is purchasing these liens to do due diligence and see what that property is like. And you can look on Doges to kind of give an idea. Probably the best way to see what it's like is to drive past the property. Can't enter the property because you'd be a trespasser, but you can drive past, or maybe Google Maps even. I don't know how current those photographs are, but your best way to determine the condition of the property is to drive past it. And you can do a little online research too. On the assessor's website, it'll tell you who owns it, that kind of thing. And if you're gonna purchase these liens, you really need to know what you're buying, because it's buyer beware. And once you buy it, it's yours, that the lien is, and the lien doesn't necessarily turn into property, but we can get to that in a little bit.
So you're saying that this is just the lien portion, not necessarily guaranteed for the property.
Right.
Okay.
And the only thing that you are guaranteed to is to have that lien for 3 years. You're not guaranteeing the property. The property owner can come in and redeem that lien at any point from the point of purchase to the point at the end of the foreclosure when a sheriff's sale is confirmed. So that's about 3 or 4. Well, it's 3 years. So, and during that time, what the investor would get is the 14% interest. So, quite honestly, most investors that this is their business, they're in that for that interest. They're not in it to own property, which leads to leads to zombie properties, which we'll talk about a little bit further into the presentation. Okay. So now we've talked about how they become delinquent May 1st and September 1st. And like I said, in Douglas County, it is April 1st and August 1st, just purely by the population is how that works. Okay, so, and this is the statute that gives the treasurers the power to hold these tax sales. Yeah, it's just statutes if you're interested. If you're not, I don't blame you. They're pretty dry. But that just gives the power to the counties. And not all the counties in Nebraska do sell their tax liens, because that way the counties get those tax dollars into their coffers immediately, and to be used for police and fire and all county business and city business and schools and everything that property taxes are used for.
We have a question in the chat. Who do you buy the lien from?
We're buying the lien from Douglas County, because the counties are the entity that assess and collect the taxes. So that's who you're buying them from.
And if no one buys the lien, what happens to the taxes, the property?
Okay, so if no one buys the lien at the March sale, in May, there is what's called a private sale. And that is, you just walk into the Douglas County Treasurer's office, you look at the list of what they have available, and if you want to buy it and it's available, you can buy it at that point. And then after that May sale, if nobody buys it, which happens, then Douglas County itself gets the Douglas County certificate. And at this point, and since 2016, the Land Bank has had an interlocal agreement with Douglas County, and we do all of the foreclosures on behalf of Douglas County of those tax certificates. And then at the end of that process, if the property isn't sold to anyone in the public, then that property goes to the land bank. That's kind of why we do it for them. Douglas County used to do their own foreclosures years and years ago, but I think it just got to be overwhelming for them, because you used to be able to do a tax foreclosure of every certificate you owned in one court action. And then the court said, no, we're not going to do that anymore. Actually, the legislature said that, and they changed that. So it's one lawsuit per certificate, unless the property is owned by the same people.
So is this one of the money makers for our income producers for the land bank? Do you get that 14% too if someone comes to buy up?
Actually, no. For Douglas County, if it's one of our own certificates that we've purchased at sale, yes. If somebody redeems it, we get that 14%. But if it's a Douglas County certificate, the county gets all of the taxes and interest. What we get out of that is we get reimbursed all of our court costs. And then in Nebraska, when you foreclose on a certificate, you're the holder of the certificate is awarded a 10% attorney fee. And that's 10% of the total of the taxes, the interest, and the court costs up to the date of the redemption or the sale. And so we get that 10%, which I wouldn't call it a moneymaker, but yeah, no. Because the liens that Douglas County have, obviously they've gone through 2 sales and nobody wants them. So they're not real valuable. So they're not real high dollar liens. So we're not getting a lot of money off of that, but that's okay.
What do you mean they've gone through 2 sales? That means nobody wanted them in the March, nobody wanted them in the May, so they're just there now.
Yep.
Got it.
Yeah, Mike Reedman, who's on our board, likes to say we get the worst of the worst, and he's correct. Okay, so after the sale, so you've got your tax certificate, and now it's pretty much just a waiting game. Because in the state of Nebraska, property owner has 3 years the property owner has until a certificate or a sale of share sale of the property at the end of the foreclosure period in order to redeem. However, the lien holder has to wait 3 years before they can start that foreclosure process. So let's say that you bought a certificate at the March 2022 sale. You're not going to be able to start your foreclosure until March of 2025. So then you just wait. And if at any point from the time of purchase until the time of the title transfers or the foreclosures entered, that property owner comes and redeems, they would go into, before the foreclosure started, they would go into the Douglas County. So let's say you bought it March of 2023 or 2022, and the property owner does their taxes and gets their tax return in January of 2024, and they want to redeem those taxes. They would go into Douglas County, they would pay the redemption amount to Douglas County, and then Douglas County would issue the check to you minus a few fees. There's a $20 certificate fee that you pay when you buy the certificate, and then the property owner, when they redeem it, pay that fee again. However, the county keeps it both times. So all you're going to get is your principal and your interest from the redemption. So, a year's worth of interest isn't bad, but they could also walk in the day after the sale and redeem, and then you're not going to make anything. So that's where you have to have a good business plan and kind of know what you're doing in order so you don't lose all your investments. So I always advise, consulting an attorney and really studying this process if you're going to do it. And I mean, it is a viable business model, but you have to be real careful. It's not as easy as the late night infomercials have made us.
Yeah, they lie. They tell us that's the way to do it.
Yes.
So you're saying that some people honestly make a business just off of buying tax liens and then getting the interest from them a year or so later.
Yeah.
Wow.
But those are the these are the companies that send hundreds of bidders to these sales, and that's part of the reason why it's helpful for the land bank to have that trump bid, because we send one, we register once and we put in our stuff. We don't have the funding to send hundreds, or the manpower to send hundreds of bidders. Even though it's just uploading your tax list, it still takes a lot of work and a lot, that $25 a pop too for each bidder. But these companies that make a business out of it, yeah, they invest, and that's part of their cost to do business is those fees.
And then, I don't know if this might be a question for someone else too, is bidding, is it actually like an auction where the price goes up? Or is it just like a first come, first serve? This is the one I have my hand on, and it's not really a competition type of thing when you say bid.
Yeah, bidding is misleading because it's not. It's the lien is, it is what it is, and it's what you do now. It's all online, and so they load it into the computer, and then I think it's more like a lottery. If they do it in person, which like I think Cass County still does it in person. I used to go to Cass County when it's a round robin, and when you get there, you draw a number, and then you sit, 1, 2, 3, 4, 5, and then they take the first property, start at 1. If 1 wants it, then they move to the second person. If 1 doesn't want it, then they offer it to 2, and they offer it to somebody until that property goes so far until that property is gone. So there's no bidding. There used to be, prior to 2013, there was a bidding process, but it was a bid down in the interest of the property. So how that worked is you would bid down, basically you'd say, I will pay full taxes for 99% interest in this property, and then you would go down from there all the way to 1. I was actually at one sale where it went all the way down to 0. And I don't know how that ever turned out for those people, because I didn't know what they foreclosed, what they were going to foreclose on at 0. So I think they were just hoping, praying to God that it redeemed. But the company that I work for would bid it down to 1 a lot. And then we have these deeds for 1% interest in the property, which means then you have to do what's called a partition of the property. And it's just more cost and more expense. And you probably still aren't going to end up with the property. You'll be lucky if you end up with your investment back. But thankfully, the legislature changed that, and they don't do that anymore. So
talk about a gamble. Woo.
Oh yeah. Yeah.
So,
and what that does is that pushes out, to me, my company, it was a big company. They had a lot of backing behind them. They had a lot of capital, but the mom and pops, the people that really pushed them out of the sale. So I think it's a lot better now. It's still hard with, all these companies sending multiple bidders, but at least you have more of a chance than we did when they bid down the interest in the property.
well, and it's back to your comment about, the late night shows telling us that tax liens are the way to go, but not really giving us the education of knowing that you actually have to put in some money to get money, and you're not guaranteed that money if it's redeemed. So just making sure we calculate accordingly before we just jump in on the bandwagon and not knowing. So very grateful for today. We have a couple of questions in the chat before you go. I don't want you to lose your time, but one question from Guillermo is, any exceptions to the 3 years of waiting for the foreclosure, or is that pretty set standard? Or once it goes, or I guess a better way to ask this is, once a property taxes are behind, if I buy it for the 1 year, do I get to buy it for the other 2 years? Or is it the 3rd year that they are behind that it goes up? And then
that is a good question. Once you purchase that certificate, you are given, and if the property owner doesn't pay the next year's taxes, you are given first opportunity to buy those taxes. And if you do, then they attach to your certificate. So 3 years later, when you are going through foreclosure, it's that all 3 years. Usually by the time you get to foreclosure, there's 4 years of taxes on it, just by the way that we pay them. And if the property owner doesn't pay them and you don't pick them up, then they would go to sale. So if you bought the 2022 certificate and then didn't pay them, and the property owner didn't pay them, then there'd be a 2023 certificate behind you, which actually, as we said, last in time, first in line, it would be in front of you. But all that means is, if you went through the foreclosure, you got deed to the property, you'd have to pay off that certificate or risk losing it to that owner of that certificate. And currently it is 3 years. Senator Wayne had a bill in the unicameral last session that he is going to reintroduce this next session that would change that 3 years to 2 years if the property is vacant and abandoned. Yeah, we're really excited about that because you all know the longer a property sits there and it deteriorates, but the harder it is to save, and it's hard. It's easier to and cheaper to renovate a structure than it is to knock it down and build another one. So we're really have our fingers crossed that this will go somewhere this session. They introduced a bill, I think it was Burke-Harr several years ago, and it got some pushback from some investors and from actually the Lancaster County treasurer, who is no longer there. So he had some issues and he's no longer at that job. Senator Wayne did a really good job this time of talking to all parties involved. And I think that he's got a good statute drafted. So hopefully there'll be some time with all the ARPA stuff coming up as well. Have to be some time to get this done too. Unfortunately, you can't go any shorter than 2 years, and that's by our state constitution. The redemption period has to be at least 2 years, which, I guess it's good. It protects property owners too.
Wow, that's so interesting.
Yeah.
And then 2 more questions here.
Sure.
Are cost and 10% attorney fees awarded in foreclosure actions, or are they also available for a tax deed is issued?
They are just for the, in the foreclosure actions.
Okay.
So if the property owner redeem prior to that foreclosure starting, they're not going to have to pay that cost. But as soon as you file your complaint in district court to foreclose that lien, then that cost becomes due.
And then the 14%, is that across Nebraska or is that just in Douglas County?
It's across Nebraska. It's 14%. And the legislatures tried to mess around with that interest rate too. But in the last several years, they've kind of let it go. There was one state senator out of Columbus that didn't like it, but he got term limited out, and they haven't really bugged it since he's been gone. So, and I know it sounds high, and it is, but it's not the highest in even in the area. In Iowa, for example, it's 2% per month. So that works out to 24% per annum. So, and I think South Dakota is 12%.
You're very knowledgeable of this. 20 years in, huh, Dina?
I don't know a lot about a lot, but unfortunately, I know a lot about this one thing. It's a ton of fun at parties, let me tell you.
I mean, me and you could probably talk over this at length at a party.
Oh, I have been known to clear a room. Yeah.
Awesome. Well, that's all the questions currently in the chat. Just wanted to make sure you're good with your slide.
Yeah, I want you to go to the next one if you want. This is what a certificate looks like. So if you go over to, and they still do them on paper. So even though the sale itself is online, once the sale is over and you've been awarded your certificates in probably a month or so, less than a month, you'll get a big stack of these papers. And this certificate it's the same information across the state, no matter what county it is, because it's called for by statute. So, and it has to describe the property that's on it. It has a number, so you know what certificate it is. It says who it's been sold to, and most importantly, it tells you when you can start your foreclosure.
Okay, question about that. Individuals that are looking to buy these, so you mentioned it, a company can buy these tax liens, or it can be an individual. Is there any certain paperwork that needs to be submitted in order for you to have a proof of possibility to buy one of these? Like, do you have to have your LLC information, or you have to
have, yeah, if you're a company, you have to have an EIN, and if you're an individual, then I think you have to use your social security number. That's basically, it's pretty simple. And all that information can be found on the Douglas County Treasurer's website. Their website actually for the tax sale information, it's very informative. It's really well done, I think.
Thank you.
Mm-hmm. And this is just an example of the certificate, and circled in red is the taxes that was the year that they were bought for 2014. So you can see in the certificate that your base was 109.06. And then that 21.92 was the interest that it accrued to the date of purchase. And then that $5 is an advertisement fee, and that's on every single certificate. So that's basically your base cost that you're not going to recoup are $25 per certificate. So that's something, if you're plan to invest, that's something that you need to plan for and know that you're not going to get back.
Gotcha.
And then you can see on this certificate too, that it says that you are entitled to a deed on or after the 5th day of November, 2019. I want to talk about that a little. So I know I've been talking about the judicial foreclosure because that's what we do here. There is currently still a mechanism for foreclosure in the state of Nebraska that ends up with a deed to the property. It transfers the title of the property straight to this person that held the certificate. You have to do, obviously you have to do noticing, and you have to give them that, I think it's a 90-day redemption period after they're served with notice prior to when you can request the deed. The reason I'm not going to talk too much about it because that is currently kind of in limbo. There was a case out of Scotts Bluff that I actually started when I worked for the other guys. We took a tax deed to a gentleman's property in Scotts Bluff, and then he went to Nebraska legal aid, and they're challenging the tax deed process in Nebraska. And we actually won. I didn't handle it. There's another law firm that handled the case. It got appealed all the way to the Nebraska Supreme Court. The investor won at the Nebraska Supreme Court, but they have since gotten involved with a group called Pacific Legal Foundation, and they have petitioned the United States Supreme Court to hear this case. And their argument is that this is equity theft, which I think you can probably make a decent argument, because what their argument is the lien, say this lien was, $109, and after 3 years, it would have been what, $300, $400, and you lose your $50,000 house for $400. And so their argument is that should be unconstitutional for the investor to get that equity. So I don't know what's going to happen there. I think they do make it. And there was a case just this week out of Michigan where the Fifth Circuit found Michigan they made an equity theft argument in that case, and the court found for the former homeowner. So tax deeds, it's a quicker way to get the title of the property, but it's also a little bit riskier, especially now. Last session, Senator John Kavanaugh had a bill to eliminate tax deeds in Nebraska. He could still carry that over this session. I don't know if he will. If the Supreme Court takes this case and says that we can't do this thing, then you won't need to. But with the judicial foreclosure, there is no equity theft, because whatever is over your principal, interest, court costs, and attorney fees, even if it's, let's say that judgment's $5,000, and then it goes to sheriff's sale and the property sells for $75,000. All that the tax lien investor is going to get is $5,000. That $70,000 is going to go either back to the property owner, or it's going to go to a mortgage company or somebody else that had a lien junior to the tax certificate. So I think there's a very decent argument to be made that says that's a fairer way to do that. But on the business side, I understand the tax deed too, because I was there. But I would advise anybody at this juncture to do a judicial foreclosure until the courts decide and our state legislature decides what they're going to do as far as the tax deeds are concerned. So that's why I didn't want to get too heavy into that, although I think I just did. So
No, that was perfectly fine. I get it. It sounds like this is constantly in motion and people have their eyes on it a lot because I understand the protecting the homeowner and that people fall on hard times, but being able to maneuver through what is just in keeping their property and what is actually that redemption, that true redemption. So That's
Yeah.
really good context to know and to follow as we continue on and legislation and so forth, and keeping an eye on that.
Yeah, I mean, the good
Uh,
thing in the state statute, whatever laws are in place when you purchase a certificate, that's the law that's gonna apply to that
Oh.
certificate with respect to foreclosure as well. So that at least you know that going into it. So like I said, if this is something that any of you are interested in doing, keep an eye on that before you buy certificates next March and know, what's gonna go on. So just so you're aware, so you know what to expect 3 years down the road when it's time to foreclose.
So looking at this example specifically, this was based off of 2014 taxes.
Mhm.
It was held for 2014, 15, and 16. And then that was able to go up for foreclosure because it reached the 3-year mark.
This actually, this is the certificate, the 16 is when it was sold. So
Mm.
it was sold for the 14. I know they say 14/15, but I think it's 14 taxes that are payable on 15. So it's 14/15. And then it's sold in 16, and that 16 will tell you that's the year the certificate was purchased. And
That's
then,
not confusing at all.
yeah, I know, right? But then down here it says, on this November date, this means the certificate, and it says private sale. This means it went through the 2 sales and did not get sold. So it went to Douglas County, and then November, Douglas County, in November 2019, that's when Douglas County could start their foreclosures.
Gotcha. Okay, so can we do some quick math? I don't know if you're gonna do this eventually, but if I were looking at this, and this must be the one that went through 2 sales and nobody wanted, right? Because here I am, $109, at best, 14%
Yeah.
will get me up to, I should have just had this spelled out here.
And so I went to law school because they told me there'd be no math.
It gets me about $15 over that. If someone were to redeem this, I would have already put in $25, $26, which I get money back would be less than $100. So this isn't a good investment.
Nope.
That's why you all get it.
Right.
Got it.
And then when, usually on Douglas County doesn't add subs to their certificate. So in this Douglas County, they would just, the next year, there would be 2015 when they would sell, and then, they would sell them year by year unless somebody picked them up, pick this parcel up at the next sale, which they could. So, a Douglas County certificate's only going to have 1 year of taxes on it, whereas a private investor would probably have 2 or 3 at least. The land bank, we go back, we kind of analyze whether to pay them or not, because we have that magic wand that we can wipe off the liens after we take the title. We've been paying them more if we have the funds, because, kind of feel like we owe it to the county to get that money in there. But yeah, so that's another thing that you really gotta think about when you're purchasing. Is it worth it? Is the debt worth more than the dirt? I mean, that's what we talked about a lot all day yesterday, but yeah.
Yeah, what do they say? The juice worth the squeeze.
Yes, there we go. And this was just the subsequent taxes that we were talking about that Guillermo had asked about. And yeah, as a certificate holder, you do get first bite after the property owner. Obviously, the property owner can come in and pay them. I think Douglas County doesn't have to, but I think it's their policy not to take the subsequent payment if there's a certificate out there, because they don't want to see them pay the subsequent taxes and then 2 years down the road get foreclosed on for a year's taxes that they've paid the other ones. So I think what Douglas County will make a property owner do is pay the ones that are delinquent prior to the current taxes, which is good practice as far as I'm concerned. All right, now redemption we've been talking about, and I get Shannon always yells at me because I talk about redemption, and then she'll say, shouldn't you tell them what redemption is? So this redemption is the taxes get paid. And once the taxes are paid, that lien is extinguished. The certificate holder walks away with their investment in their 14%, and the property owner keeps their property, and we all go down the road. Like I said, if it's in foreclosure, if you just hit send on the computer and you file the complaint to foreclose on that lien, that's when that 10% kicks in. So the property owner would also have to reimburse you for the $82 filing fee, any service costs that have been accrued, and any publication. If you've got a published notice, you get all your costs are reimbursed, and that 10% attorney fee. So actually, if you can get to the 3 years and start your foreclosure, even if you don't end up with the property, you're probably going to walk away making at least a little bit of money on it. And that's a lot what a lot of these bigger investors count on, is getting on that 14% especially. Okay, now tax purgatory, are these properties also called zombie properties? In Nebraska, if you buy a certificate, you are not required to file a foreclosure on it. If you do file a foreclosure, you're not required to complete that foreclosure. And even if you take it all the way to sheriff's sale and you're the only bidder at sale, you are not required to confirm that sale and take title of the property. So when that happens, then that's how these properties end up in tax purgatory. And some of these larger companies, if their business model is to collect that 14%, when it comes time to start the foreclosure, they're not even going to start the foreclosure. Or maybe they'll start the foreclosure in hope that's going to prompt somebody to redeem. But if they don't redeem it, then they just walk away. And so that lien stays on that property. So you can't sell it because there's still that lien there until it's extinguished by law. So you have 9 months from that March date that you can start your foreclosure. You have 9 months to start your foreclosure. So for that 9 months, it's obviously going to sit. You can't do anything. Then that'll drop off, but chances are there's one right behind it. And so these properties, especially the properties that we end up with, and the properties like in Douglas County that don't get sold at sale, just circle and churn and churn and churn and stay in this tax purgatory forever.
So you said something about extinguish. What is that? When does that happen?
The lien with the certificate, if you don't file within that 9 months, then whatever's attached goes away.
9 months. Gotcha.
Yeah. But like if it's a Douglas County certificate, it's just gonna sit there because the liens for taxes and special assessments stay attached to a property for 15 years.
Mm-hmm.
So, but most of the time they've gone through at least some sort of foreclosure to get rid of them a little bit, but they're still, some of them are just going to cycle through and never change ownership and never get anybody in there to do anything with the property.
So then that's when the land bank comes in and says, okay, we will take these into our portfolio and we will either help them get demolished or maybe make a connection for a cheaper bill for someone to want to come in and demolish it. Like, what happens to these zombie houses? I'm going to call them that every single time I see one now.
If we have, since I've been here, in almost 2 years, we haven't acquired a structure. We would love to acquire a structure because if we can get a structure, we have one over on Spencer Street that this gentleman totally rehabbed. It's beautiful. I got to walk through it when I signed up on our release because and when we sell a property, we give them about 2 years to do something with it. So he was done and I got to view the property, and then he sold it for $174,000. And there's a family that's living in it now. It's over on 38th and Spencer. And it's just, I've got goosebumps right now just talking about it. So that's our hope, is that we end up with these properties and we get them to people like this gentleman that can rehab the structures. Unfortunately, usually by the time it gets to us, the city's already torn it down. And if it's that bad, they have to. They do consult with us a little. If we're going to foreclose on a property, it's got a structure on it that is been tagged and we're far enough along the process, they'll kind of leave it alone so we can get in there and get that property saved. But yeah, that's our job either. And most of the time we end up with vacant lots. So, and if they're vacant unbuildable lots, what we try to do is assemble them, get them to the neighbors. The neighbor can add to their property, put a garage on, swing set up, a garden, something like that. If we can, one of our biggest tasks, I think, is to assemble property. So if we can get a whole block assembled, and then we can get it to a developer, maybe one of your graduates, and can, put some multifamily on there, do some row houses, do something on that property, and then it gets back in the tax rolls. It's good for the community. Everybody wins in that situation. So that's kind of what we use the tax foreclosure for.
So once you know that a house has become a zombie property or whatever they're called, it's become in this purgatory, how long before we can get our hands on it in order to help the land bank get relieved of that burden?
If it shows up, if it's continuing to show up on the tax list, I would check and see if it's on the private list, that you can just walk in and buy the lien, and because that will cut down your foreclosure, the waiting period on the foreclosure. If you have to wait and buy it at the regular tax sale, do that, because at least if you're going to do something with it, at least it's cutting down on that land, on that redemption period. We don't buy certificates for other entities, but we are certainly open to listening. If you see something that you think that we could help, we will certainly take a look at it, and if we can add it to our list, we would add it to our list too. Now, although if we end up with it, I got to give the caveat that we can't necessarily sell it to you, but we're happy to take a look and see if it's something that we could help save, and at least get it out there back to the open market and get it out of this tax purgatory.
Definitely.
Cure it. I don't know how you cure a zombie. I never watched The Walking Dead. I didn't like it.
I will not watch The Walking Dead. I need no nightmares. I get enough nightmares looking at the zombie properties. I'm okay with those. So in the Douglas County Assessor site, when you pull up the treasurer's report, how do we know if it was the property owner that bought that paid the taxes, or was it a bidder that bought the taxes? Will it show something different to know whether or not a property we've been eyeing or something is actually needs to still be paid, or or if that's actually someone that's nearing foreclosure?
It does show if it's paid. It does show if it's there is interest paid on it, but just from that, you can't really tell whether it was an investor or the property owner. If it's a Douglas County certificate, it'll be in red letters up there. It'll say there's an outstanding Douglas County lien on that, and it'll give you a phone number to call. So you could call over there and see if you could pick up that certificate from Douglas County, because they don't save them for us. If there's a lien, if there's a certificate out there and you want it, they'll sell it to you, and then you all can do the foreclosure on it. If that screen that it showed the principal amount, the interest amount, and then it says $5 there, that's going to tell you it went to sale. That was sold at sale, because that $5 that advertising fee. And you can also, they're pretty good. Yeah, this one doesn't have one. Well, usually on that other advertising, it will say if there's a $5 there, it'll say that it went to sale. And you can call over to the treasurer's office, and if you give them the key number, they can tell you whether there's a certificate on. I don't know if they'll tell you who owns the certificate, but I think they'll tell you if it's a private investor or if it's Douglas County. And like I said, if it's Douglas County, you can probably buy it from them. They're happy to take your money.
That's great information. There's a clarifying question that says there's no way to find out who purchased the certificate, right? And I think you actually just answered that they might tell you that it's a private owner or the property owner or not. I don't know.
Yeah, they'll tell you if there's a certificate out there. They will definitely tell you if Douglas County holds it. If it's a private investor, I don't know if they will give you that information. It's not exactly public record. But it never hurts to ask. I mean, they might tell you. And around this area, there are two big companies that purchased them. Adair Asset Management, who I used to work for, and then Guardian is out of Sarpy County. Those are the two big ones. And then there are some out-of-state investors. Like, although I haven't seen Bank of America in a while, thank goodness. They're notorious for coming in, buying up certificates and not doing anything with them and contributing to that. Yeah,
I
they just want the
didn't know
interest.
this was a business model. I heard of people investing and saying, do you want an easy investment opportunity to do tax liens? But I really never thought it to the extent of it being a business model.
Yeah. I mean, it's easy in the sense that they'll take your money. And that's the easiest part. I mean, it's otherwise, if you don't know what you're doing, you can really get burned. Because you could also end up with, property that's like we end up with, it's the size of a hallway. And what are we going to do with that? And gonna sell it to either neighbor, and they're in the driver's seat because you will own the hallway.
Wow. That's great information.
Sure.
So then we have our timeline here.
Yep. Yeah, this shows how properties end up in tax purgatory, because you can see the starts in 2014 when the taxes become due, and they goes through 2 or 3 tax liens or tax sales. Nobody does anything with it. Before you know it, it's 7 years later and it's still a tax sale, and the ownership stays with this property owner, who clearly has probably abandoned the property. Because if you're not paying taxes for this long, it's not financial hardship, it's you walked away, or the owner is deceased and either didn't have any family or didn't leave any sort of will or any plan for the property, and it's just vacant. Although there are sometimes there's still family living in there, and since the title hasn't transferred, they don't know they're supposed to pay taxes. I've encouraged that or encountered that. Those properties usually get bought at tax sale, and then it's discovered when the foreclosure starts what's happened there.
I have seen that, and some of our residents who don't primarily speak English or fully understand the homeownership process, that a family member has passed away and they didn't understand the tax structure until they were in foreclosure.
Yeah, and that's unfortunate. I'll give a shout out to my former employer. They were really good about trying to work with people like that. I mean, they're still going to make some money, but they're going to try to, they used to do payment plans and all kinds of things to try to help people. But there are some companies, some investors that just won't.
So to that question, how does a person get out of there? Like if they didn't know that they had 3 years worth of taxes that they were not paid, when it goes into foreclosure, can they just pay the complete 3 years plus interest and then
Yes,
be back on track? That's
Yep.
all they have to do is.
Yep.
Oh, okay.
Yeah, but that could be, sometimes that's a significant amount of money.
Yeah.
So, if the property owner files bankruptcy, the lien they can't extinguish the lien or the debt in bankruptcy. But, if they file like a Chapter 13, they can work it into the payment plan. And I think it's been a while since I've done bankruptcy, but I think last I checked, there's still on the 13, there's still 60-month plans. But then they have to keep paying the taxes. The best thing to do is, hopefully if there's equity in that property, is to get a home equity loan and pay it off as soon as you possibly can.
Very nice.
Mhm.
Thank you. Well, that's the end of that presentation. As we transition to your handout, does anyone else have any other questions for Dina? As you can see, she is a wealth of information that doesn't always just come up in a PowerPoint, doesn't always come up unless you're having this conversation. And we have her right here. So please don't be afraid to ask questions because it has already been evident how beneficial having these types of conversations can be. Now I do have your handout here.
Yeah, I think that is mostly what I just talked about, but it's got all of the statutes cited in it. So if you want to go, if anybody wants to go and look at the statutes, yeah, I'm a lawyer, so I like them, but It does tell a story. It does, I mean, I will say these are really well written. And not only because I helped rewrite the last round, but they I think they explain the process pretty well. And if you have the inclination to try and do this, I think you need to review these and just, I'll be happy to answer whatever questions. Angel has my contact information, so just give me a call.
Are you okay with me sharing this with everyone?
Sure, absolutely.
Okay. I am going to attempt to upload this to my Dropbox and then to send it your way. I don't know. Yeah. I'm going to try to get it to where you can see it, everyone.
I feel your pain.
Is there anything else that you feel is beneficial for developers? So Spark Academy is all about creating emerging developers in areas. And if we're being quite honest, North and South Omaha are where most of the properties and or parcels of land are that go under tax lien. If we are looking to develop a piece of land or to go before it gets to the land bank, do you feel this is the most beneficial way to do that? I mean, it's 3 years versus you holding I mean, the land bank holding all of the costs and so forth.
Sure.
So, I mean, what do you feel is the best way for our emerging developers to get access to?
Well, I mean, this is a good way, but as I said, it's not a guaranteed way of acquiring the property. There are a lot of avenues for the property owner to pay those taxes and retain ownership of their property. And that's the way it should be. Now, 9 times out of 10 in these areas that you're looking at, the properties have been abandoned and it's probably nobody's going to redeem it. Now, if you have time to wait out that 3 years, and you can go back and look at the tax history and see if anyone's been paying the taxes. You can drive past the property and see if anybody's there. If it's vacant and abandoned and nobody's paying the taxes, there's a good chance that nobody's going to redeem those taxes either. But you still have to wait out that 3 years. You're still going to have to do the judicial foreclosure, most likely, or even the tax deed foreclosure is difficult in the sense that the notice is important. It's notice, because the property owner or anybody else that has an interest in that property has the right to know what's going on so they can step in and save their interest. So there's a cost associated with that. I obviously work for the land bank, so I can't, foreclose for anybody else. There are a couple other attorneys in town that do this. I'd be happy to share their names with y'all if anybody gets to that point. But that, that's going to be an added cost. So it's just, it's a decent way to acquire a property, but it's probably not the quickest. It might not even be the cheapest at the end of the day when you add on all the foreclosure costs too.
Okay. Oh, that's great information. Such great information. I am learning how to upload attachments. Rest assured, if I don't put it in the chat, I will put it in the email that goes out after this. And I will. I'm always learning as I conduct these that ask something great and I'm just like, okay, I'm gonna figure this out.
I get gently made fun of over here because my tech skills are subpar at best.
I mean, it works out, but it's always great.
Yeah.
So these are all of the notes that are from your presentation, correct?
Yeah.
Okay, this is good. And this is all public information. It's just that you've nicely put it into a process for us so that we can kind of go through what it is.
Yeah.
I'm interested.
Let's not lie, I cut and pasted. That's what I did.
Oh, I like it. I like it. I am interested, anybody on the call, any participants, have you ventured into the tax lien realm or attended anything? I'm interested in hearing from anybody on the, any participants, any attendees. And maybe they're all shy, which is okay too.
And I've not participated, but I've always been interested in how it works. This is Jendai, and I have seen, I've been scoping out a property that the land bank owns, and the property right next to it has liens on, on the land. And so I was, looking at assembling it at some point, but excuse me, my first step would be to actually try to contact the property owner that's there and see if they would be prepared to sell their land. But I was, I was interested in how the tax lien issue operates. So thank you very much.
Yeah, and if you would, reach a deal with that owner, then you would step into their shoes, so you would have the ability to redeem all those taxes.
Yes. Yeah. Great. Thank you.
Great comments. Much
I
like.
got one
Oh,
more
go ahead.
comment, Angel.
Mhm.
Working, my name is Guillermo Diaz with the Spark, and working with emerging developers, trying to help them to acquire land and develop their plan as soon as possible. And I think the city and the government always have some type of barriers that prolong our activity. It doesn't make any sense to me to, have an empty or abandoned property and hold it for, that many years until the foreclosure, process goes through. Deanna, have you heard any proposals to eliminate this waiting period? I know that is legal, reason why to wait, but have anybody raised up or proposed anything different than 3 years to a lower term?
Well, there was a bill that Senator Wayne introduced last session that he's planning on reintroducing this upcoming session, that would change that redemption period from 3 years to 2 years if the property is vacant and abandoned. But like I said, it can't, as far as property tax foreclosure goes, it can't be any less than 2 years, because that's in the Constitution. That would require a change to our Constitution. And I don't know if you could get those guys in Lincoln and women in Lincoln to go for that.
Oh, I don't think so.
Yeah, and that would take it. No, that would take it to it would have to be a vote of the or vote of the people to actually change the Constitution.
Oh, yeah.
And so I haven't actually never heard of anyone trying to take it less than 2 years. 2 years is I've a couple of times I've seen them try to take it from 3 years to 2 years.
Wow.
So I mean, and that's to protect the property owners too. Unfortunately,
yeah.
When people walk away from the properties, there's not a lot we can do unless you can find them and purchase the property directly from them. That's the best way to do it.
Thank you.
Thank you for that. Great questions. Any other comments or questions? We were hoping to have some individuals that have gone through this, but I mean, with your experience, Dina, I feel like you're probably the prime example of individuals that have gone through this from a corporate standpoint, but still seeing the process and how beneficial it can be. If I'm being quite honest, 14% doesn't sound super huge to me unless I'm stacking up a lot of these for the years. I mean, it's like a savings account, I'm assuming, and you hope that the person kind of redeems their taxes and just gets the 14% back out of it. But if you have some cash somewhere that you're able to invest, or if there's a property that you're sitting or area that you're looking at, because in specifically North Omaha with the vacant lots, they're very sporadic. There's not a lot of rhyme or reason. So if there's a property that's right next to something that you might currently own, or in Jenda's example, that have an eye out on being able to then move forward with that, this is very beneficial and help to know the process and protocol to do so.
Yeah.
Yeah, that's very good.
Hi, I have a question. My name is Jackie and I own a business, Heirloom Enterprises. And I actually did go through the process. I couldn't speak earlier because I was driving, but I pulled over now, and I did actually go through the process with a few other people, just as, you know, as myself, I'm a sole owner. But I noticed that none of us got any of the properties that we bid on, and then some other entities got a ton of properties. Is that because the businesses are bidding and having several bidders bid?
Yeah, yeah, because what they generally do is, have 20, sometimes hundreds of bidders, and they put the same list in. So that increases their chance of getting those properties.
Right. Okay. Thank you.
Because to my knowledge, I know Douglas County doesn't limit the amount of bidders you can have. I'm not sure there are any counties in Nebraska, to my knowledge, that limit that.
Great question. Anything else? I love that Caitlin from Legal Aid of Nebraska is here. I'm putting on my different hats because, of course, I absolutely love the fact that, as an investment standpoint, I can go out there and get 14% on somebody's unpaid taxes, and I can make some money from this because this is just, a way for me to increase my investment. But then I also think about the property owner who's struggling, and there could be lots of different reasons why they are behind on taxes. Are there any other things of consideration? We've talked about actually talking with the property owner and saying, hey, we see that you're back on taxes. Do you need help? Like, what's the case? Having that conversation. But what other perimeters are in there? Or Caitlin, have you seen anything specifically with property taxes? Or, I'm just interested in what it looks like on the person that is actually in default, because right now we see it as an opportunity, but
Yeah.
that I can look a little different on the other side,
Yeah, absolutely. And I'm really I've learned a lot actually today. I know a bit about property taxes from sort of the perspective of the homeowner. So kind of the opposite side here. And so I come at it from that, but I'm very grateful to be here and just to kind of learn a bit as well, things that I didn't know, and from the investor's perspective as well. But anyway, to your question, Angel, about what sort of protections are built in for homeowners, the protection really is the 3 years, right, to redeem. I would say from my perspective there, or sort of working with folks who are in owner-occupied homes, that there is a bit of a problem in that you don't get notice until 3 years later, which is different from other kinds of debt, right? Like if you're in default of your mortgage, or you don't pay a credit card or something, you get all sorts of things. People are calling you, sending you notices. Whereas and this has happened to clients of mine, you get that initial notice that to pay your taxes are delinquent and they're going to be sold on that first Monday in March, right? But you're not obligated to be sent or given another notice that you owe this tax, and the 14% is accruing until 3 years later, right? When now it's due, and you have, if it's the foreclosure process, that's different. But if it's the tax deed process, you have 3 months to come up with the money and redeem. So yeah, it's an interesting process, and I deal with people who live in their homes, and it does happen. Sometimes it is truly just vacant properties, but I've represented people before who are owner occupants who have lived there for a long time, or there's some kind of family problem that the reason it isn't paid. It's never, people aren't ever like not paying their property taxes because they hate the government and they'd want the county to not be paid what they're entitled to. There's always a reason. It's usually a sad one, frankly. So anyway, that's my little perspective on it from the other side.
I think that's important to acknowledge, right? Is that in the same essence of when we go out to develop land, we love that prices increase or that the value of the properties are increasing, but that also means a increase in valuation for taxes, which then creates an issue of whether or not if they were already making payments and then increasing taxes, then they can't pay their taxes. And then that opens up the opportunity for them getting that one notice. Because I just thought about that. Yeah, because if I buy the tax lien in a sale, then I get the opportunity to do it all the subsequent years. So they automatically tell me I get the opportunity, but they don't tell the property owner that they
They
have.
still get the tax statements.
Oh,
on the
okay.
property. Yeah.
I don't think so.
They
You
do.
sure?
Yep.
Are you sure that's true across all counties? Because I've had clients tell me the opposite.
Yeah.
I know
That's
for
interesting.
sure it's in Douglas County, I believe it's statute. I think it's in chapter. Well, it's got to be in 77.
Yeah. Well, you know what's even more interesting now that we're talking this out is that these must be individuals that don't have mortgage payment, right? Because they are paying their taxes outright versus them getting taxes taken by a mortgage company.
Although I will say, if you have a mortgage, check your statements, make sure they're paying those taxes, because I have encountered people that thought their mortgage company was paying them and didn't know until they got served with paperwork from me. I had one, this was many years ago, one gentleman who paid them or the mortgage company and paid them, came in, redeemed them like they were supposed to, and then wanted to charge him all the fees. So I told him if he wanted me to come testify, I would happily testify on his behalf, because the mortgage company was the one that screwed that up.
Oh, man. There's so many layers to this and so many effects, but also the opportunity to look through different lenses and perspectives to see that where there could be an advantage, or for one person, it could look like a disadvantage for another, and to be able to act diligently or maybe vigilantly, and be able to communicate this process to other people, because it is one of those things that we just talk about and say, yes, you should do that. Have you heard about that? But we really don't know the process and all of the laws like Dina does, because I mean, I'm highly impressed. And that is just a changing system, and that there's individuals that see that there might be some inconsistencies, but how do we then protect the consumers to make sure that they are in the know, as well as how they are making sure that they can benefit from it as well, and understanding the process and what their rights should be. So, great conversation. I love this. This is great. See, everybody needs a deep dive about tax lien processes. What other questions do you have? Comments? Anyone? Thank you, Caitlin, for that perspective in your comments.
No problem.
Dina, do you do these personally? Do you jump into the realm of tax lien sales on a personal level?
No, I have only done it as far as on the legal side.
Yeah. It's just so in depth, and I think you're absolutely correct that people have to understand the pros and cons and their buying power.
Yeah.
Otherwise, this
And
can
it's
get kind of
risky.
costly.
I have a 401k, and that's as much as I'll delve into the stock market. So I mean, and occasionally if the jackpot is big enough, I'll buy a lottery ticket. So maybe today, but
It is pretty high.
yeah. But I personally know I've never jumped in, and not that I'm trying to discourage anyone, but it's just, it's risky.
Yeah. And some people probably were just like, I'm ready to do it. And
Yeah.
that's okay.
And I say, go for it.
Yep. Because that's your spectrum. And whatever that is for you that's you. That's your own choice, option to be able to do it. So it sounds like I have a few takeaways. I did put the Doges into the chat, so you can look up the Douglas County Assessor information there and their tax
Hey,
information.
I'd
on
like
the-
a turtle sundae, 2 scoops.
Oh, I can hear you. And then that sounds good. And then I will send out the handout that Dina provided with all of the legislative, the laws and statutes. Dina, did you want us to share your presentation with everyone?
If you'd like to, that's fine. Yeah.
Okay, and then your contact information I will put into the email as well.
Okay.
I was interested in giving out the links to the Douglas County Treasurer site, and then also any bills or whatnot that might be coming up where we can watch for those that might look or change the way that this tax lien
Okay.
sales may look.
Yeah,
Was
so
there
far the only one I know that's coming up is Senator Wayne's. And
Wayne's,
I don't think, it doesn't have, obviously it doesn't have a number yet, so that won't
Right.
happen until January, but
Yeah.
I will, when it gets a number, I'll shoot you an email and let you know.
That'd be awesome. Is there anything else that I can prepare for our attendees that will assist in answering any other questions that you may have? I might dig into this equity theft idea just so I can be more
It's
knowledgeable about it.
interesting. Yeah.
Mhm.
If you, and if you just Google the term, these cases will probably come up.
Yeah.
Or if it's Pacific Legal Foundation, that is, they have a website and they've got a bunch of articles on it.
Yeah, I find that interesting. And then also what we're doing to make sure we communicate and educate the community about all of this. So I might add a date on my calendar for that March and May.
Yeah.
Because they come up in February, right? You said the list comes out in February.
Yeah.
And then we buy March. So March 1st of 2023.
What's
will
the
be
first, whatever
buying-
the first Monday, it's the first Monday in
first
March,
Monday.
so, yeah.
So that first Monday in March, we will be buying certificates from 2022.
They will be actually
2021.
2021 taxes.
Yes.
Yep.
Because 2021 is paid in 2022.
Too. I
And
know,
if they
right?
didn't pay 2022, it's sold in 2023.
Yep, exactly. Yeah.
But I'll remember.
It took me forever to get that, so don't worry, just keep saying it.
It just keeps going.
Yeah.
All right, last call for any other questions. And Dina, if there's any last words that you would like to share on behalf of you and your knowledge of the land bank. Otherwise, if there's no other questions and comments, we can call it a day here.
I just want to say thanks for having me. And like I said, if anybody has any questions offline, just reach out. I'm happy to try to help.
We appreciate your partnership and your willingness to help us on all parts at Spark too. So thank you so much. There's a few thank yous coming in the chats and I appreciate all of you. Okay, we'll call it a day. Thank you so much again.
Thank you.
Bye-bye.